The weekly chart had a buy signal bar last week with a big tail on top. The bulls are hoping that we're going to reverse up from the bull trend line that's gone on for about 8 years and get back into this trading range. However, every trader who bought last year is now holding a loss, and they see a very big bear breakout a couple of weeks ago. And all of these bulls are hoping for any kind of a bounce back up into this range so that they can sell out of their longs with a smaller loss. So you have a lot of bulls trapped into losing positions and eager to sell if we get back up above that February low. So sellers above, even though a decent buy signal bar. Daily chart, we had a sell signal a couple days ago, and today triggers the sell by going below yesterday's low. We gapped down, and we had a buy signal here on December 24th. It's the low, we reversed up, but a bear bar, a bad buy signal. You had bears who had limit orders to sell at the high of the prior bar, so they sold this high, got filled here, very disappointed by the rally, and they're hoping for the market to come back down to this high so they can get out break even. So you get bears wanting to buy at that high. A lot of those bears are strong bears, and they sell more higher. It's reasonable to do, and when traders do reasonable things, they can usually make money, or at least avoid a loss. And therefore, we're probably going below the December 24th high at some point in the next week or two. This is a strong reversal up. This is the first reversal down. The odds are we're going to get two legs sideways to up, and therefore we may get a lot of buyers right here below this low without first going down here. So we're going to get two legs up. It's possible this is the start of the second leg up, and then we come down to the December 24th high. Also possible we come down to the December 24th high and then have the second leg up. Trading range, things are confusing. Big down, big up, big confusion, and you have to expect reversals. The bulls are hoping that we're going to get a trend from the open, a bull trend from the open, and we just rally all day long. But we got resistance, 60-minute moving average just above, and it's below yesterday's high. So right now, do I think the gap is going to close? I don't know. I think the gap is probably going to stay open. But if one closes on its high, and then especially if two is also a bull bar closing on its high, then the odds will favor the gap closing. Here's the 20-bar moving average. We're far below it. Even if the bears expect a bear trend day, bears do not want to sell too far below the average price. We are far below the average price, and therefore a lot of bears do not want to sell here. They want to sell closer to the average price. We can get to the average price by rallying or by simply going sideways. 80% of the time when there's a big gap down, there's going to be at least one reversal in the first hour. And the bulls will look for a double bottom or a wedge bottom. The bears will look for a double top near the 20-bar moving average or a wedge rally to the 20-bar moving average. Obviously, the average has to come down here for the bears to get their sell. So what do you do with bar one? Possible low of the day. So if it closes on its high, some bulls will take the buy. But we're fairly close to the 60-minute moving average. I'm not sure that it's worth it. It's probably better to wait to see if we get two consecutive bull bars closing at their highs before starting to buy. Globex market, huge Globex range. Now, TradeStation is locked up. But anyway, it's a huge Globex range, and we're much closer to the low of the Globex range than to the high. 90% chance we either go below the Globex low or above the Globex high. This is the Globex low. That's the Globex high. We're much closer to this than to that, so much better chance of getting down here. The Globex range is huge, and therefore it's probably less than a 90% chance that we go below here or above there. but it's still probably an 80% chance. If we start to rally, then the odds are we're not going to go beyond the Globex range. We'll be too far from the top and too far from the bottom. So what happened to the attempt by the bulls to close the gap? Bull bar, but tail. That red line is the bottom of this trading range for the bears, head and shoulders top. So rally, left shoulder, head, and then right shoulder. The bears want a measured move down, and the bulls want the trading range to continue. Every head and shoulders top is a trading range. 40% chance they get a swing down, 60% chance they do not. Last week's high is still a buy signal. We have a bull reversal at the monthly trend line and exactly at a 20% correction. I mentioned last week the odds are against the correction ending exactly at 20%. There have been 32 corrections of 20% in the past 100 years, and none ended exactly at 20%. The average was about 30%. Possible low of the day, but not particularly good buy above the high of 1 or above the high of 2. You can see the moving average is starting to fall quickly. Every bar that gets added here replaces one of these bars. So the average price is getting pulled down pretty quickly. Again, the bears are looking for a double top or a wedge top near the moving average. Big gap down, bears want a double top or a wedge top around the moving average, and the bulls are hoping for a wedge bottom or a double bottom and a low of the day. 20% of the time you get a trend from the open, either up or down. So 20% of the time we just go straight up or straight down. But 80% of the time we're going to get a double top or a wedge bottom or a double bottom. And that usually takes at least an hour. So that means at least an hour of sideways trading most days when there's a big gap. Why would anybody buy? Because last week we had those 2 huge bull bars after a sell climax. Traders know the odds are we're going to get a second leg up. Daily chart, we had 10 consecutive bear bars. That has never happened in the 20-year history of the E-mini. So it's extreme, unsustainable climactic. Odds are the bears will take profits and not be eager to sell again until the bulls get at least a couple of legs up. The bears want to see if there will be a climactic reversal and bull trend or simply a bear rally. And they usually wait about 10 bars and 2 legs before they decide. So not a lot of aggressive selling probably until we get more bars. Limit order market, right? They sold the one high, even though it has a bull body. The bulls want 2 to close on its high. If it does, then we're probably always in long. If 2 closes on its low, are we always in short? You can argue the gap down, we're always in short, but I like to see consecutive trend bars up or down, and I need one of the bars to be strong. At that point, I make my first always in decision. So bulls trying to get 2 to close on its high. That would create an always in long open, increase the chances of higher prices. Consecutive bull bars, but 2 did not close on its high. It did not even close above the high of 1. So is it always in long? If it goes above 2, we're probably always in long, but it's not good enough to take the buy. Can you sell below 2? I would not. Too far below the average price. If you're going to be selling low, you want to be selling an extremely strong bear trend. Consecutive bull bars is not an extremely strong bear trend, and therefore most bears are not going to sell down here. It's not far above average bearishness to be selling far below the average price. This is kind of average behavior, and you really want to be selling that far below average. 3 relatively big bars, all almost completely overlapping one another. So not a lot of conviction that the price is terribly wrong. Magnets above yesterday's low, 60-minute moving average. Consecutive bull bars, slightly more likely that we will go up. Bar 3 represents the close of the first 15-minute bar, and right now it's near its high. So on the 15-minute chart, the bulls have a failed breakout below a two-day range and possibly a buy signal, 2 legs down, 1, pullback, 2. Bars are big, so the stop for the bulls is far below. That means the risk is big. So not particularly good trading for stop entry traders. Most traders are better off waiting. If 3 closes on its high, it's a buy, but traders are risking $500 on the first trade of the day, buying in a bear trend. So, not very good for most traders. More traders would be willing to buy above 3 if 1 and 2 closed on their high and did not overlap as much as they did. Because they're overlapping, traders see it as a possible early type trading range, and they become less willing to buy at the high, even if this ends up as the low of the day. Bulls trying to get the 15-minute bar to close on its high. Globex chart, traders looking for a higher low, major trend reversal. Bear trend, bull breakout, higher low. That's enough to make it always in long, but the problem is the one that I said. Stop far below, so risk is big, and resistance not far above. Bears hoping that this is just a test of the 60-minute moving average from yesterday's low. But with 3 consecutive bull bars, bar 3 closing on its high with a decent sized body, always in long, probably buyers below 4, so low probability sell. So far, not good stop entry trading, too much overlap, and prominent tails 1 and 2. Lack of conviction. Where are 2 or 3 consecutive bull bars closing on their highs without much overlap with the prior bars? Where's the sense of urgency? Where's the sense that the price is terribly wrong? That is not present yet. Looks like a lot of the bulls scalp for 2 points. Buy the 3 high, scalp out 2 points. Can you buy on the stop 1 tick above yesterday's low? Arguing the gap is closed. I typically do not do that. A lot of times gaps close by a few ticks, and then the market reverses back down. But very good so far for the bulls. The more bull bars closing on their highs, the more likely we've seen the low of the day. What happens if we get another bar with a big tail on top? Then we'll probably end up having a trading range open For example, we might get a wedge rally over the first hour, 3 legs up. So 1 pullback, 2 pullback, 3 to around the moving average. This kind of a thing. Strong rally, but high of the day. 3 consecutive bull bars, probably buyers below 4. But there's a gap down, and you get 4 bull bars. Yet only 1 closes on its high. It increases the chances that we're going to get a wedge rally to the moving average. If you get a wedge rally, sometimes the legs are strong. 4 bull bars here, 4 bull bars here, yet we got to around the moving average and we sold off. Strong rally. Low 1, low 2, low 3, got a swing down. When you get a strong rally on the open, even if you get a swing down, it reduces the chances of a big bear trend day. Reverse down, reverse down, reverse down. Another type of a wedge. Down, 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 wedge, failed breakout above the wedge, and then a lower low double top. Here we get a wedge and we get a bull breakout above. Got a couple legs down, but not much of a sellout. Another type of wedge, another wedge. Here we get a sell-off and then a wedge, and then a sell-off from around the moving average. Big rally, ended up with a wedge, sell-off but no new low, or at least the bears got a swing down. So the bears are looking for a swing down. So what do? If you sell below 5, we got 4 consecutive bull bars. Limit order bulls will buy the 4 low. So it's possible this is a buy climax on the open and the high of the day, but I think most traders are better off waiting. Bears are hoping it's a gap down, buy climax, and then we get a swing down. Usually better to wait for a micro double top, so up, and then consider selling below a bear bar, especially one closing there is long. Here we got 6 bull bars. I don't know if that's a bull bar, but a lot of bull bars. Buy climax, gap down, buy climax, gap down, buy climax. 4 or 5 bars up. Usually you need at least a micro double top before you get a swing down. Traders typically buy the first reversal down, even with a bear bar. Strong rally, bear bar, buy the first reversal down. Usually you need a second leg up before the bears can get a swing down. Same thing here. The odds for the bears selling below 5, I would wait to see 2 or 3 bear bars before taking the sell. Odds are they're buyers below 4. Theoretically, 5 is a pullback in a bull trend and therefore a buy signal bar. But most traders are not going to buy above 5. Big tail on top of 4. And even 6 is not a particularly strong stop entry buy signal bar. Tails on tops of 4 of the first 5 bars. Bulls trying to close the gap below yesterday's low, Tuesday's low, Monday's low. When a gap is small, it's now small. Usually the gap will close, so the odds are we're going above Monday's low. But we're probably going to get some kind of a reversal down from around the moving average. Too much overlap, too many bars with tails on top. Unlikely to be a trend from the open bull trend. More likely a bull leg in an early trading range. Most bulls are not going to buy above 6 if it has a conspicuous tail on top. For the bears, it's still a buy climax, and now it's a second entry sell, below 4, below 6. But right now, we have 4 or 5 bull bars. Most bears will sell with limit orders, but not with stop orders. So confusion, so more sideways to up, but not strongly bullish. Gap down, buy climax, testing yesterday's low in the 60-minute moving average, but 5 of the first 6 bars bull bodies. So even though possible high of the day, more likely buyers somewhere below 6, not strongly bearish. A lot of overlapping bars here, warning us that today probably will have a lot of trading range trading. We're beginning with a lot of trading range trading, a lot of uncertainty. Can you buy outside up if 7 goes above 6? I think we're always in long, but we're right at resistance. 60-minute moving average, yesterday's low. So not a strong buy setup. Market double bottom 5-6, always in long, but 4-bar tight trading range at resistance. So not a very strong buy setup. Bulls closing the gap. Still trend from the open bull trend, but not yet strong. Sometimes trend days start slow. Right now, more likely we're going to get a wedge rally. 1 pullback, 2 pullback, 3 around the moving average. I hit delete on the line and remove some other line. Bulls trying to change the character of the market from a trading range type of market to a trending type of market. When I see these breakouts, I just buy the market as it's happening. Whenever the market does something very fast, it usually will have at least a small second push up. Monday, not a very big range, and therefore today might be an outside up day. It's possible we could get above Monday's high. Bears trying to get a reversal down from around the moving average, and the bulls hoping this is a trend from the open bull trend. They're trying to change the character of the day with bar 8. 4 sideways bars, 3 sideways bars. Bulls now trying to get bars with not much overlap. They're trying to get consecutive big bull bars. They're trying to get a gap or a measured move up here. TradeStation has locked up. I can see on my other computer that we're up here. I have a second data feed outside of TradeStation so I can see what the actual price is, which right now is $24.91. So right now the E-mini is up here. I'm going to turn off my screen for a moment and log in and out of TradeStation. I just did that on the other computer and it fixed the the problem. So you can see the bar grew a lot more up to the 2493 area. The bears are hoping second leg trap. They're hoping that first leg up, trading range type of leg, and then second leg up breakout, but a failed breakout. Testing the moving average, but a surprise bar up. So even if it's a second leg trap, the bears will probably need a micro double top. So odds are buyers below, and that will go at least a little higher. Bears are hoping that it's just a trap, a rally that fails, and we get a reversal down. A weak rally, strong breakout. Bears will sell below the bear bar, closing on its low, looking for a swing down. The bears need a bear bar closing on or near its low. Right now, I think 50% chance we're going to go above yesterday's high. Decent rally, and you add to that, the odds are 2 legs up on the daily chart, and then finally, yesterday, Monday, small range. That combination, I think, gives us a 50% chance of the rally today going above Monday's high, whether or not we sell off here. Second leg trap bears, they will sell if 10 closes on or near its low. Always in bulls, they'll get out below any any bear bar. We have 70 bars left of the day. A lot of time to get up here. So we can do all kinds of stuff before we get up there. But right now, I think it's more likely than not. Today will be an outside up day. Obviously, if we start to get a series of bear bars, I'll change my mind. But right now, I think we're going above yesterday's high at some point today. What happens if 10 closes on its low? Can bears sell? Betting on the second leg trap and the swing down to the buy climax low here or here. I would rather, I'm not going to, right? If it closes on its low, I think it's an okay thing to do. If it does not close on its low, most bears will wait for a micro double top or 3 bear bars before selling. Right now, the odds are buyers not too far below. If it closes on its low, and then if 11 goes below 10, do I still think we're going to get an outside up day? That will reduce the chances of it. The best thing the bulls can get here is sideways for a few bars and then an attempt at another leg up. 8, very big bar. It's a surprise. And surprise bars typically trap bulls out and bears in. You have bears selling above bars, and then they say, darn, I didn't like that. And the bears will buy back shorts. They're looking for a dip down that would allow them to get out of their shorts with a smaller loss. The bulls who missed the buy are looking for a dip down so they can buy, hoping that this is the start of a bull trend. It's a high one above 10, but a bear bar. Always in long. I would get out of longs below 10, even though it did not close on the low, just because of the risk of a second leg trap. If it's a bull trend, there'll be plenty of other opportunities to buy. But if you get a breakout, second leg up, and a bear bar, it's usually better to just get out below. Here we get 2 bear bars. You can always buy again above that or above that. First leg up, second leg up. Get out below bear bars. Bears will get short below bear bars. Weak first leg up, strong second leg up. I would get out a point or so below any bar, including a bull bar, and I would definitely get out below a bear bar closing near its low. And bears will short, looking for a test down to the biclimax low. Traders buying above 11 is their stop below 11. They probably have to allow for a couple legs down, so it's really, if you're buying above 11, you probably need a wider stop. You're not going to let it get hit, but you probably need a wider stop. Moving average, we may go sideways here for more bars. A lot of bulls will wait for a high 2. Near the end of the first hour, we have a bear break below a tight trading range, and we are reversing back up into the range. Crude oil. Very, very good day. The odds are crude oil is going higher. Here's the daily chart. Possible final flag. We're probably in a $10 range for the next several months, and we're probably near the bottom of the range. You can buy USO if you're trading stocks. All right, here's USO. You can get leveraged UWT, which is a leveraged version of it. I bought UWT a couple of days ago, looking for a move up here. High 1 for the bulls, but the bulls would like a good buy signal bar. They'd like the bar to close near its high. And even then, as I said, we have a lot of bars left in the day to get up here. So, we could easily have a sell-off for an hour or two, just a trading range for an hour or two before we get up there. I don't know that we will, but as I said, I think better than 50-50 chance today is going above yesterday's high. Strong rally last week, second leg up likely. Yesterday, Monday, a small range bar. High 1, but tail, bear bar, doji. So if you take it, your stop is below 7. You're not going to let the stop get hit, but that's where your initial stop has to be. Remember, surprise bar up 8, odds are at least a small second leg up. This qualifies as a small second leg up. So this is the minimum that traders expect after 8. Bar 12, end of the first hour. So far, a decent bull bar. Back in the middle of a 2-day tight trading range. The bulls need follow through. As I said, I think we're going above Monday's high, which is up here, but we have a lot of time to get there. Bears second entry short for the second leg trap. Remember, I said most bears would not sell below 9. They would wait to see if we get a second sell signal bar. They're trying to create that with 12. Most bears are not going to sell with a stop below 12 unless it has at least a 3 or 4 tick bear body. Even then, they're selling at the bottom of a relatively tight range. Bulls, I would get out. I'd be flat below 10, and I personally would not buy above 11. I would wait for a second buy signal bar. If 12 does not close on its low, they're probably will be buyers not far below. The more it closes on its low, the more willing bears will be to sell below, betting on a second leg trap. Not a great sell. Did you see why? Two problems. One is huge bar, so huge risk, and two, a lot of overlap. Limit order market, you'll have bulls buying that close. You know, if I was not talking, I would have bought that close for a scalp. I tried, but I was a couple seconds too late. You know, I was talking and I tried to buy the close for the scalp, and it was already a couple ticks above the 12 close. Second leg trap, but not a good sell setup. Surprise bar, typically you want a second entry sell, below that, below that, below that. Then you look for a swing down to the bottom of the buy climax, that low or this low. Strong rally, first leg, ABC, pullback, and then second leg, micro double top. Sell below a bear bar closing on its low. Micro double top. Weak first leg, a wedge rally, and then we got a very strong bull breakout. Bulls would get out below that reversal bar, below that bear bar, and bears would like a micro double top, which they have here and here, and then they start selling below bear bars, either below that or below that. So that's the sell for a swing down, but I did not take it. Can the bulls buy above 13, high to 11? 12 is a surprisingly big bear bar. To buy above 13, the bulls will want a very big bull bar. Otherwise, they'll wait. After a surprise, the market usually gets at least a small second leg down. So a lot of the bulls will wait for a micro double bottom. First leg down, bounce, second leg down, and then if we get a micro double bottom, they'll buy. The swing bears looking for a swing down from the second leg trap. Stop is all the way above 12. I think too much risk, so I did not take it. Too much risk, not enough reward, and not enough probability. That's probably enough to make it always in short, but I think trading range is more likely than bear trend, and not particularly good sell unless you're willing to hold for a swing. The bears should not have allowed that. We broke far above the 60-minute moving average. This might be simply a pullback to the breakout point, the 5-high 60-minute moving average. Consecutive big bear bars closing on their lows. Most bulls are not going to buy above 14. They first have to stop the selling and make the market go sideways for a few bars. This pair of bars reduces the chances that we'll go outside up. So right now, probably less than 50-50 that we go outside up. However, if we start to stabilize and get a lot of bull bars over the next hour, then the odds will go back above 50-50 that we rally to above yesterday's high at some point today. Went a little bit below yesterday's low, deep pullback like today, yet still rallied above yesterday's high, outside up day. Got outside up by the end of the day. For the bulls, buying above 14, I would wait for a micro double bottom or for 3 consecutive bull bars before buying. For the bears, they're still short, but I think most bears do not want to take the sell. We're right at support, 60-minute moving average, the 5 high breakout point, a 50% pullback. Bulls trying to create a credible high one. They're hoping this is just a vacuum test of support and the start of a bull trend, but enough bear bars, more likely sideways for a few bars. Big up, big down, big confusion. So even though it's a credible buy with the 2 big bear bars, I think it's probably better to wait for a micro double bottom or for a strong reversal up. So far, a good bar for the bulls, erasing the damage from 12, 13. A lot of confusion. We had a lot of overlapping bars here, and now big up, big down, big up. So we may go sideways here, but we're probably back to always in long. Resistance, we sold off, we sold off, we sold off. Bulls trying to break above it. Very good bar, 15, 14, but bear bars, so we might get a pullback. We're in a resistance area. The market sold off several times at this price today. If we do sell off, the bears will want a double top, but big enough reversal up 14, 15. This is probably a breakout, and if 16 sells off, more likely it'll be a pullback from 15 and not a double top 12. Kind of like this, right? Strong reversal down, but a pullback from the 8 breakout and not a reversal into a bear trend. Possible high of the day, but more likely buyers not far below 16. So for the bears, low probability sell. For the bulls, if it's a bear bar, a lot of the bulls, it's probably better to get out below if it's a bear bar closing there, it's low. But probably buyers below 16, and we're back to being likely to get all the way up here by the end of the day. Market's telling us that bull trend, but not strong bull trend. So we may have a trading range here. Not the kind of bar the bulls want to see. For the bears, you can argue wedge, 3 legs up, 1 pullback, 2 pullback, 3. Second leg trap, double top. Possible high of the day, but I think minor reversal. So is the probability high enough for a scalp selling below 16? I don't think so. I think it's okay for the bulls to get out, but I think we'll get a 1 or a 2 bar pullback and then a high one buy. High one, whenever you get a lot of buy setups that force you to do things that you don't want to do, like buying too high, buying at the top of a tight trading range, it increases the chances of a lot of trading range trading. Bears still hoping for a wedge and then a reversal into a trading range. Right now, probably 70% chance we've seen the low of the day. We're getting near the close of bar 18. By the close of bar 18, 90% chance we've seen either the high or low of the day. And at this point, it's much more likely that we've seen the low of the day. I said on the Globex chart, the range was so big, we may not get below the low or above the high. We still might get above the high because if today becomes an outside up day, that would get us to around the Globex high. Do you sense something's wrong? Right? Big bull bar 8, only a small follow through, and then big bear bars. And then we did not get a good high one buy signal above 16 or 17. 16, it's a pullback in a bear trend, so it's a high one buy, but it's a bear bar at the top of a tight trading range. So there's something wrong with the setups that whenever you see a lot of things that just don't look right and they make you feel uncomfortable, your radar should be telling you that we're probably in for some trading range trading. Still always in long, bulls still buying for any reason. But bear bar, bear bars, bear bar. It looks like we're probably going to enter a trading range before we go much higher. You sometimes hear me talk about breakouts that have urgency, 3, 4 consecutive bull bars closing on their highs without much overlap. When you get that kind of a rally, you typically get follow-through buying, sometimes for several days, and sometimes it could be the start of a bull trend. And 5-minute crude oil chart, a bunch of bull bars closing on their highs, very little overlap, tremendous sense of urgency, tremendous sense that the price is wrong, that we have to go higher. So 60-minute chart, daily chart, outside up, looks like we're going at least to the moving average, probably over the next month back up in here, and then trading range for the next several months. I said most bears would not sell below 16. They'll be more willing to sell below 18 because it's a second entry sell. And you can argue a wedge, 1, 2, 3. Also, it's bar 18. And the bears always try to get a reversal of a rally around bar 18. However, even if the bears get a good-looking sell signal bar, the odds are minor reversal and trading range. 2,500 has been a magnet for several days. We've been oscillating around it. Here's 2,500. You can see it's pretty much the middle of the range. So we may get a pullback here. So the bears, a second entry short, 16, but small body, big tail. Most bears are not going to take that sell. Bulls, because of the context, I think it's okay to get out of longs below a bear bar, 18. Weak sell signal bar, so you get some bulls buying the 18 low. I would not. I would wait for a pullback. You got a deep minor reversal here, bear bar here, bear bar here. A lot of bulls will switch from buying for any reason to only buying pullbacks. Bar 18, whenever you're around bar 18, often exactly at bar 18, the bears try to get a reversal down. Here, bar 18, here the reversal is at bar 16. Rally, wedge, like today, yet the bears were able to get a bear trend. Here's bar 18, and the bears get a reversal bar 16. A lot of bears wait for bars closing on their lows before selling, looking for a break below the 18 bar range. Bar 18, high of the day. Here's bar 18, like a double top, despite strong rally, became the high of the day. Bar 18, new low. We get a rally, but could not get above the 18 bar high. Bulls, high 1 above 18, high 1 above 19, always in long. Probably going to be an outside up day. Tough buy, right? We're getting reversals after every bull bar. So it's a high 1, always in long. Initial stop below 19, below 15, 17. But if we get a reversal below 20, bulls will get out below 20. Wedge 1, pullback 2, pullback 3. Bulls would like another strong breakout like 8 or 15, but we're losing momentum. Bull bar, a bunch of bear bars, bull bar, bull, bear, bull, probably bear on 20. So always in long, but it looks like a bull leg in what will become a trading range, which means we'll probably get a bear leg. The market simply deciding where the bear leg will begin. No sign of a credible top yet. If the bears get a good sell signal bar 20, bears will take the short. Not many bears were willing to sell below 16 or 18, but this would be a third reversal attempt if the bears get a bear bar, especially a good bear bar. And that would be the first one that stop entry bears would sell. Limit order bears are selling. They sold above 10, they sold above 12, they sold above 16. They're probably selling here at the 18 high. Last week, I talked about the sell signal bar on the daily chart and the buy signal chart bar on the weekly chart. And I said both would trigger. And traders did not know which would be the first to trigger. We triggered the sell today, and we may trigger the weekly buy today as well. Still always in long, still probably going above yesterday's high. But the weak follow through, the lack of a series of consecutive bull bars increase the chances that we'll get a pullback. It's still buy for any reason, but it's not a strong buy to close type rally. We had 2 bull bars bear, 1 bull bar bear, 2 bull bars, probably bear bar 21. Testing yesterday's close should get above yesterday's high at some point. I thought we'd pull back first, but now I'm thinking we may just go right above it. Traders buying for any reason. We're up to yesterday's close, so there should be some profit takers around here. Can the bears sell? Wedge 1, pullback 2, pullback 3, 1, pullback 2, pullback 3. Most bears will wait for a micro little top. Bulls buy climax. They'll get out below a bear bar, especially a bear bar closing near its low. But minor reversal down. Bulls will get out below any bear bar. They'll get out 6 or 7 ticks below even a bull bar. Right now it's still by the close, but climactic, and we're at one of the targets, yesterday's close. As I've been saying, I think today's going to be an outside up day. Does it have to just go a little bit above yesterday's high and then reverse? No, sometimes an outside up day becomes a huge bull trend day. Close to the Globex high. So right now it looks like we'll probably get there. And that's more than 10 points above where we are. Bears trying to prevent outside up. I don't think it matters. We're close enough to yesterday's high. Even if the bears get a reversal, we're probably going above yesterday's high at some point today. And bears sell, double top, 79. 4 consecutive bull bars. I think bulls can get out below a bear bar, but for the bears, I think it's better to wait for consecutive bear bars before selling, or micro double top, or 3 consecutive bear bars. Sometimes outside up, here's yesterday's low, yesterday's high. You can go far above it. Here we paused at yesterday's high, but went far above it. Yesterday's low, yesterday's high. We went up for a measured move based upon yesterday's range. Yesterday's low, we went one tick above yesterday's high and reversed down for 10 bars. And then we got a big bull trend. We might do this over the next hour, but the odds are we're going higher. I don't know that we go far above yesterday's high, but the odds are we're going above yesterday's high. Here, a little bit below yesterday's low, a little bit above yesterday's high, outside up, trading range. This does not look like today. This looks like today. So I think we're going above yesterday's high. And I think we're going more than just a point or two above yesterday's high. Do the bulls have to get out below a bear bar? No, but still overs and long. We may stay overs and long all day. But this is fairly climactic rat resistance. I think it's reasonable to get out below 23 or wait for a bear bar closing nearest low and get out below the bear bar and then see how far down we go. We may pull back for 5 or 10 bars, and I would then buy lower. Rarely you'll get an outside up day that reverses around and becomes outside down. So yesterday's low, reverse up, yesterday's high, and then back below yesterday's low. Unlikely. It's pretty rare. Not good enough for the bears to sell below 23. Very strong rally. Let's look at ticks. Oh, that's really interesting. 1267, 1200 ticks. Rarely will that be the final high. And you can see we pull back and then we get a higher high. 1200 ticks means that at that instant, of the 3,000 stocks on the New York Stock Exchange, 1,200 more of them just traded up than down. So that's very broad buying. So it's like 2,000 up, 1,000 down. So very strong buying. And it's usually not the final high in price. We got a slightly higher high in price. Very climactic rally, ending right below resistance, yesterday's high. Might get a deeper pullback. So spike, pullback, parabolic wedge, 1, pullback 2, pullback 3. Are we ocean short? Probably not. Even if we come all the way down to this buy climax low, we're still above the moving average. More likely a minor reversal. But as I said, we have a lot of bars left to the day. We have 60 bars left to the day. And therefore, we do not have to go above yesterday's high in the next few bars. We could pull back for an hour and then go up there. But the odds are we're going above yesterday's high. Globex chart, parabolic wedge, 1, 2, 3, or 1, 2, 3. Decent bear bar, but probably a minor reversal. Minor reversal, so big risk for the bears selling below 24. And minor reversal means trading range more likely than bear trend, and therefore the risk reward is not all that good for the bears selling below 24. They'd rather sell above bars or sell a lower high. Bar 24, the end of the second hour. A 5-minute chart often does something dramatic in the final minute to alter the appearance of the 5-minute bar. On the 60-minute chart, the market often does something dramatic in the final bar, bar 12, bar 24, bar 36, and you can see bar 24 put a big tail on the top of the 60-minute bar, making it less bullish, making it look like a part of the 3-day tight trading range. Is this 25 like 14? No. That was a surprise bar up 15. Context, I think, was different. This is much later in the rally, and we reached very close to the target, and we have a parabolic wedge. I think that a lot of the bulls will want a high 2, and I think it's less likely that we'll go straight up to a new high. We'll probably have to pull back a couple legs sideways to down. Can you buy above 25? Betting it'll be like 20, like 14. You can, but I think we're going to go below the 25 low at some point in the next few bars. So I'd rather wait for a second entry buy. You got limit order bulls 23 low, so they bought more lower, trying to get above the 23 low. But chances are, we're going to go lower. Bulls trying to prevent outside down. They're trying to create a micro double bottom 25. Probably 2 or 3 sideways to down legs to the moving average, and then starting an hour or 2 from now, probably a move above yesterday's high. Not a great buy. It's a micro double bottom down 24, down 26, but you're buying above a bear bar 26, and pretty good. Big up, big down, big up, big down. I think we're still always in long, but not a strong buy. We might be in a limit order market with a bear's lower high, but minor reversal. It could end up being major, but in general, not enough bars down, plus very strong rally and magnet above. So if it trades down below 28, probably minor. Not a lot of bulls willing to buy above 26 bear bar, and not a lot of bulls willing to buy above 27 bull bar. Big up, big down, trading range likely, especially since we're at resistance level. For the bears selling below 28, I don't know that the math is worth it for a scalp. You can do it for a swing, but it's probably not going to be a swing, so it's a low probability bet. Similar to this, reversal up, and the bears tried to get a double top, buyers below. What's different here is it's after a climax, and typically the odds favor a couple legs sideways to down. It's possible 1 pullback 2. However, normally you want the 2 legs down to have about half as many bars as the climax. So this is probably not enough bars, so this is probably 1 pullback and then 2. Follow through bull bar, but not enough to erase 23, 24, 26. So probably more sideways to down. Trading range, right? Bulls will look for a double bottom. Bears are hoping for a lower high major trend reversal, but more likely a minor reversal. Breakout point 12 high, that buy climax low 19 low, but not very good for stop entry trading. Buying above 27, selling below 30 might be more limit order trading. If the bulls get a bull bar near the bottom, they'll get a stop entry buy, maybe a double bottom 26. You can see the dangers for stop order traders. Buying above a good bull bar 25, loser. Buying above a good bull bar 27, loser. So the bulls, high two legs down, one pullback two. We have enough bars in the correction to satisfy exhausted bulls waiting to buy again. Almost a double bottom 19, higher low double bottom 19, testing the breakout point 12, around a 50% pullback, but we're getting a lot of big bear bars. Here, here, here. A lot of the bulls now will want a micro double bottom. And for the bears, trading range more likely than bear trend, and the bears want to sell rallies like above 26. Probably too low for most bears to sell. Are we always in short consecutive bear bars? We might be, but I think it's a trading range. So I think it's better to be looking to buy. But why did the bears get two big bear bars closing on their lows? That will make a lot of bulls not buy above 31. They'll wait for it to go sideways for a few bars and then buy. Or they'll buy with limit orders, buy bear closes, buy below bars, and scalp. Stop order bulls will want a micro double bottom. Bulls looking for a bull bar closing near its high. The odds are still that we go above yesterday's high, but like I said, a lot of bars left in the day, and we can enter a trading range for an hour or more before we get above yesterday's high. Here we broke one tick above yesterday's high and pulled back. Bulls buy above a bull bar. Well, after 5 or 6 bear bars, a lot of bulls would wait for a second bull bar, like here, or here, or here, or here, and then buy. Well, it's a bull bar closing on its high, and it's an IOI at the moving average, but not big bull body 32, not big bull body 33, so lower probability buy. If you take that buy, which I did not, your stop is probably all the way down below 14, not worth it. Better to wait to see if we get a strong bull bar and then buy higher, or if we get a third push down, 1, 2, 3, and then buy a wedge, or wait to see if we go sideways and then buy maybe a double bottom, 32, 36 or something. Probably a bear leg, and what will end up as a trading range, so we're probably going to test back up again. And a lot of times the bottoms and the tops are not all that clear. 23, 28, not particularly clear tops, and whatever bottom we get will probably not be all that clear either. We have room to the 19 low, the biclimax low. That's always a magnet. A lot of bulls expect the market to get there, and they're hesitant to buy above it. They want to see the market get to it, or at least to within a tick. We've got a couple ticks here, so we're probably going at least a little lower, and then maybe the 17 low, less likely the 14 low. And then a test back up toward the high, maybe this high, maybe the high of the day. Sometimes it gets very close to outside up, but then does not get all the way there. Here we got exactly to yesterday's high, could not get above it, reversed. Similar to today, got near yesterday's high, reversed. Can you sell down here? I would not. We're starting to go sideways. We might get a low 2 bear flag and one more push down. But if you're selling, I think this is more limit order trading, selling above things buying below things, and the bulls hoping for a stop entry buy. And the bears are hoping that we simply get minor reversals up and stay sideways. It's really important that we stalled exactly right below yesterday's high instead of outside up, because it increases the chances of either a trading range or a reversal. With this much buying, a reversal is not likely, so probably a trading range. The market's looking for a bottom of the bear leg, and so far not a clear bottom, plus magnets here and magnet here, maybe all the way down here. So a lot of the bulls are waiting. Some of the bulls taking this buy will use a very wide stop, just in case we get a low 2, low 1, low 2, and one more push down. These bulls are betting that even if we go lower, we'll come back up to this price, maybe up to that price. So they're willing to take the buy, use the wide stop, and take a chance, because alternatively, we might just go straight up, and they want to get in as early as possible. The bears are trying to trigger a low 2, low 1, low 2. But low in a swing down, probably a trading range day. So probably not much more to the downside. Bar 36, the end of the third hour. And the bears have a bear inside bar, but following two bigger bull bars, plus that bear bar has a fairly prominent tail below, not a high probability sell below the third hour's low. So probably buyers not far below the third hour's low, probably buyers not below the 32 low. Sell below 37, the bears want a bear bar closing on or near its low. They know the odds are this is probably the final bear flag and their buyers somewhere below, but they're willing to take the chance, 40% chance, if they get a good sell signal bar, that we come down maybe to here. So reward much greater than risk, and that allows them to take trades that have only a 40% probability. No bear bar 37, so I would not sell below 37. Bulls buying, obviously. This is latecomers. Some bulls did not buy above 36. They waited to see the breakout. It's still okay to wait to see how big the breakout is. It still could be another lower high and a bear swing. However, everybody wanted to buy. A lot of traders did not want to buy above 36. They wanted to see either a strong breakout, like 38, or one more new low and a reversal up. Still in a trading range, but a surprise bar, and therefore the odds are we'll go at least a little higher, maybe above yesterday's high. This is one of those buy the market type of bars. We may stall around the 28 high. Excuse me. So I typically scalp in a situation like this where we have a lot of trading range trading. Can this be a trap? Of course. We've been in a trading range for over an hour. We're near the top of the range. 60-minute chart, we've been in a trading range for 3 days. Anytime it's near the high, traders start to sell. For the bears to sell below 39, they need a bear bar closing on or near its low. Anybody swing trading longs will get out below a bear bar closing near its low. And if it turns out it's simply a pullback, like 16, 17, like 4 or 5, they'll buy again on a reversal back up. Some bears might sell below 39, double top, lower high, major trend reversal, looking for a swing down. So double top here. Neckline takes us down to the 14 low. But I think 38, enough of a surprise. Most bears should wait for some kind of a second signal. A micro double top, 3 consecutive bear bars, trading range. So you always have to be expecting disappointment. Bulls excited by a big breakout of a big high 2 bull flag, but so far disappointing follow through. And that's one of the hallmarks of a trading range day. You constantly get disappointed. The bears thought they had a good sell-off, disappointed. Bulls good rally, disappointed. Bears wait for a second entry short despite the double top lower high. And bulls, if 39 closes below its midpoint, most bulls will get out below 39. Even if it has a bull body, it's probably worth getting out, 6 or 7 ticks below 39, just in case we get another reversal like 28, 29. Most likely, buyers not far below, and we get a pullback. So we have a reversal and then a pullback, and the odds favor at least a little bit more up. Surprise bar up 38. Bulls want to get above yesterday's high. I suspect we're going to need a pullback to get there. Bears double top, lower high, major trend reversal, but probably minor. However, I think bulls will get up below a bear bar just in case the bears get their reversal. More likely, we'll get a pullback, maybe 1, 2, or 3 bars to a higher low, and then we'll try to get another attempt above yesterday's high. Bulls trying to prevent the bar from closing on its low. That will encourage bulls to look to buy a pullback. Breakout point 32 high, around a 50% pullback, and around the moving average. So probably buyers somewhere in this area if we do start to reverse down. And buying above 41 still needs a stop down here. Can you buy on a stop 1 tick above yesterday's high? You can buy for any reason. Bulls hoping for measure move up. The bears have a double top neckline, wanted a measure move down. If you break above a double top, the bulls then try to get a measure move up. We have all of this trading range trading. It reduces the chances of a big move up, but odds are we're going at least a little higher, especially if we get above yesterday's high. Weekly chart, we have a buy signal bar last week. I said we would probably trigger the buy, and we still have 2 days left for the week. So the odds are we will trigger the buy on the weekly chart. Suppose we fail again right below yesterday's high. Well, if the bears get a decent sell signal bar, it's a low 2, low 1, low 2, and a double top slightly lower high. It's certainly an okay swing short. If they get a strong sell signal bar, it would be a scalp short as well. Still bullish. This lack of momentum reduces the chances of a huge bull turn. The blue line is last week's high. Remember, last week's a buy signal bar. We have a pretty good chance of triggering the buy today. The bears can argue failed breakout above yesterday's high, expanding triangle, up, more, and then lower. But we're getting a series of bull bars closing near their highs, plus we have a target above. So most bears will want at least a micro level top here. Odds are we're going higher. Globex high, just a little bit above. Globex high is just below last week's high. The bears had a failed breakout above yesterday's high. You can argue higher high major trend reversal, parabolic wedge, 1, 2, 3, but 3 pretty good bull bars. I think it's okay to get out of longs below a bear bar, but I would wait for a second entry sell. Right now, I think we're going to trigger the buy on the weekly chart and get above last week's high, the blue line, at some point today. High one targets above, but bear bar, so there might be some limit order bears selling above 45. One, can you put a stop below 46? You probably need a deeper stop. We might get a couple legs sideways to down to the moving average. Between 10 o'clock and 11:30, things that look high probability are lower probability than what you might think. The market often corrects into around 11:30, and then around 11:30 it decides what to do with the rest of the day. Rally, sell off, sideways. Looks like a lot of the bulls scalped. You have some limit order bears selling 45 high and trying to sell 44 high, looking for a scalp. For the bears, they want a micro double top 44 and a bear bar closing on its low. But even then, it probably will be a minor reversal down to the moving average. Maybe the 42 by climax low. And for the bulls, they have a high one. They next want a high two. Globex high, just a little bit higher. Probably going at least to the Globex high. I think we have a decent chance of getting to last week's high as well today, but if not today, then probably tomorrow. To sell 48, bears want a bear bar closing on its low. Unlikely, we only have 10 seconds left. Bulls, they can get out below any bar because it's a second sell signal. Failed breakout yesterday's high, but the odds are there are buyers below and that we're going higher, so not a high probability short below 48. You have some limit order bears who sold the 44 high, 45 high, but they're scalping. The bears need a credible sell signal bar 49. And even then, most bears are not going to sell with the stop. When the channel is this tight and we have such an obvious magnet just a little bit above. We have a breakout test 32 with 12, so there's always a chance of a measure move up. No surprise, it takes us right to around last week's high. That's the sell. Failed breakout yesterday's high. Second sell signal. But bull bar, I would not take that short. The first sell signal really did not trigger. We did not go below 45. We have an II late in a bull trend, often the final flag, but I think the bears need a better sell signal bar, especially with the magnet a little bit higher, two magnets, the Globex high as well. Similar to 24, possible surprise bar and a couple of small legs down. Less likely higher high major trend reversal, and we come all the way back down to the breakout point, 12 high. More likely sideways here, and then we have one more attempt to get above last week's high. The bulls double bottom 46, but big bear bar, tight trading range. Rather than buying above 50, better to wait for a couple small legs sideways to down to the moving average. Bad sell signal bar 49. So limit order bulls bought 49 low and 1 or 2 points lower. However, a lot of them will scalp and try to sell back at the 49 low. And that could lead to a small second leg sideways to down. Stop order bulls want 51 to be a decent bull bar, and then they have a double bottom 46. We're in a 7-bar type trading range, so we know buyers below things and sellers above things. Big enough down 50, probably at least a small second leg sideways to down to around the moving average. Always in bulls, if they buy above 51, stop is at least a few ticks below 39.42, maybe all the way down here. We probably are going to get a small second leg down, 50 pullback, 51, 52, somewhere down here. Also, we're in that middle third of the day, especially between 10 and 11:30, when the market often enters tight trading ranges, and the probabilities are less. You tend to get more limit order trading and less successful stop order trading unless you're willing to use wide stops. 51, a multiple of 3, it represents the close of a 15-minute bar, and right now we're at the low of the 3 5-minute bars, so we're near the low of the 15-minute bar. The bulls are hoping for a pullback after 4 decent bull bars, probably first reversal down minor. Bears hoping for maybe a wedge, 1, 2, 3, but tail, 4 good bull bars, low probability sell below the low of that bar, probably buyers below. The bulls have had a few surprise bars today, like 38 and 15. They're trying to create another one here, but I suspect that we're going to go more sideways here. Limit order bulls have bought the 49 low and bought more lower, made money. Limit order bears have sold the 51 high and higher, made money. Limit order trading. Stop order bears hoping for a decent sell signal bar, and then they want a breakout below the double bottom, maybe a measured move down here. We still have a couple hours left to the day. The odds are we're going above last week's high, even if we get a brief sell-off for a few bars. Not high enough probability for a scalp sell. Bulls, theoretically, they bought above 46, and we have not gone above a bear bar, so they could still be long. Some would get out 4, 5, 6 ticks below any bar, 49. They do not yet have a credible second buy, 51, no. So a lot of bulls are still long above 46. They'll get out below 53. Other bulls know that, and they're buying 53 close, trying to prevent the market from falling below 53. And for the bears, most bears are not going to sell below 53. Middle of a tight trading range, magnet above, and support not far below moving average and the bottom of the tight range. The bears will wait instead for a strong bear breakout and then look to sell. Tight trading range, so easier to make money with limit orders than with stop orders. Most traders should just wait. It's too tight. Bulls trying to get their breakout, but bad buy signal bar 53, so you'll have a lot of bears selling 53 high and not a lot of bulls buying 53 high. You can see instead of a surprise bar of 54, could be a small bull trap. Unlike 38, not much of a pullback. Unlike unlike 15, here we got a bear bar, but we continued up. This has a greater chance of leading to a reversal down, just like 23 stalled right below yesterday's high. We're stalling here right below last week's high. Bears looking for a bear bar closing on or near its low for a sell signal, and bulls will get out below any bear bar, especially a bear bar closing near its low. Still have not gone below a decent bear bar. You can argue we went below 53. Some bulls will get out. I think it's reasonable to get out of longs, but to sell below 53, I don't think it's worth it. And selling below 54, I would not do it. Surprise bar down, so probably going at least a little bit lower. How much lower? I don't know, but at least a little bit lower. This is a sell the market type of bar. Is it always in short? When you get these big bear bars closing on or near their lows, they're often enough to make it always in short. More traders prefer seeing a follow-through bar, a second bear bar. This bar, if it closes right here, will have closed below the low of the past 12 bars, 11 bars. And that's bearish, so it's reversed all of these bars. Every trader who bought in the past hour now is holding a losing position. Those traders, or a lot of those traders, will look for any little bounce to sell out of their losing longs with a smaller loss. The result is that when you get a surprisingly big bear bar, usually you get at least a small second leg down. Bulls trying to get 56 to close off its low. They like it to close above the 46 low or the 50 low, the breakout points, and they like to close it above the moving average. So overall, pretty good bar for the bears. I think most traders want one more bear bar before concluding that we're always in short. So at this moment, I still think it's more likely that we're going to try to go up here again, but one more bear bar, and then it becomes more likely that we're going down here. Sell the market, but scalp. We have a small spike up 38 and then channel. Typically, you expect a bear breakout below the bull channel, a test of the beginning of the channel, which is where we are, and then a trading range. And that is what is likely here. 56, surprisingly big bear bar, closing below the low of about a dozen bars. The bulls will probably need a micro double bottom before buying with stops. And that means that there probably will be at least a small second leg sideways to down. Bears will sell the first bounce. Bulls will wait for a micro double bottom, like something like this, before buying. Sometimes in a bull trend day, you get a strong sell-off late in the day, 10:30, 11:30, and then the market reverses right back up to a new all-time high. So a late bear trap, end of the day bear trap. The bears are trying to do that here. Some bears will buy above 58, taking a chance that this is just a bear trap and that we're going to go straight up to a new high. And it's a reasonable thing to do. Higher probability wait for 2 or 3 bull bars and then start to buy. Bulls trying to get a credible buy signal bar. Bull trend like today, strong sell-off late in the day, and it simply trapped bears, hoping that we were going to get a trend reversal. Instead, we get back up to the high. Lots of examples, same thing. Bull trend, bear trap here, a little bit here, small one here, and then a bull bar. Traders want to see a bull bar right after the bear trap. They prefer the bull bar closing near its high. Today did not close near its high, so a lot of bulls will wait for a micro double bottom or 2 or 3 bull bars. Bears trying to get a wedge reversal, but then bull bar. Bulls start buying above bull bars closing near their highs. Same thing, same thing. Close near its high, close near its high. 2-bar reversal, but some bulls will buy above that bull bar, above this bull bar closing near its high. Strong pair of bear bars, bulls bought above a bull bar closing near its high. Lots and lots of examples of the same thing. $58 did not close near enough to its high, so a lot of bulls will not take that buy. They'll wait. A lot of times, the first buy signal bar, 58, does not look right, and then you get 59 closing on its high. That is a higher probability buy. The bears are hoping that we get a lower high, like 27, 28, and a second leg down. Swing bulls will buy, other bulls will simply wait. And if there's a fairly conspicuous tail, most bulls will not buy above 59. Big enough tail, I think, to discourage a lot of bulls from taking that buy. Bears trying to duplicate 28 and get a second leg down, and bulls are hoping that this is an end of the day bear trap and that we rally relentlessly to a new high. Tail 58, tail 59, probably will get at least a small second leg sideways or down. This is not what the bulls want to see, and therefore a lot of bulls are not buying. They're not buying above 58, they're not buying above 59. The bears are trying to get down here, and the bulls want a third leg up, 1, 2, 3, to move above last week's high. If we do get a lower high, can you sell below 60? You can do it for a swing. I don't think the probability is high enough for a scalp. And the same is true for the bulls buying above 58 or 59. It's a swing only. Most traders should wait for a second entry buy, like one, some kind of a double bottom. Big enough tail to discourage a lot of bears from selling below 60. I had my finger on the button to sell below 60 if it closed on its low or had only a 1-tick tail, and ended up with a 2-tick tail, a 3-tick tail. So I'm not selling it. And I did not buy above 58. The best second leg traps, you get a series of bull bars. Here we got 4 or 5 bars before we get a bear bar. 4 or 5 bars without a bear body. This is what you really want to see. Bars closing near their highs and no bear bars. Another good example, a lot of bull bars, 3 or 4 bull bars, probably going for a new high. Well, bulls trying to get their breakout, similar to 8. We had a weak rally and then a strong bull breakout. When the bears were unable to close 60 on its low, a lot of the computers bought the market, betting that it was a bad sell and therefore probably a decent buy. Bulls trying to get bars closing near their highs, trying to get above last week's high. Trigger the buy signal. Looks like they have maybe a 50-50 chance of doing that today. And if not today, then probably tomorrow. Similar to 1, 2, 3, 4, where we had tails and a bear bar. The bulls are not creating the kinds of bars that attract by the closed bulls. Tail 58, 59, 61, bear bar 60, and therefore a lot of the bulls are looking to buy a pullback, maybe a double bottom 57, and for the bears, 2 small legs up, and they see that this is not typical of a bear trap rally. So you got bears selling at least above bars above 60. This does not look like it's going to make it without pulling back first, or at least going sideways for a few bars. For the bears to sell, they want the bar to close on its low. And even then, it's still a 6-bar bear, a 6-bar bull micro channel. Not a very good sell. For the bulls, a pullback 52, so a high one buy, but a weak rally. Every bar has a tail or a bear body, so probably sellers not far above 62. Looks like a bull leg in our trading range. All right, confusing. So sideways more likely than down. For the bears, lower high, major trend reversal, and for the bulls, a test down. I think it's going to be a minor reversal, and that the bulls will try to get a double bottom, and then maybe one more attempt at last week's high. That tail tells you the bears were scalping. They sold, got a quick profit, bought back the shorts. It also tells you that some bulls were buying, maybe below 61. For the bulls, they need a bull bar closing near its high. The bigger, the better. But even with a pretty good bull bar, it looks like we've been in a tight range for 20 bars, and that is not good for stop entry traders. I still think we're always in long. You could argue always in short, 56, 57. But because bear traps are common at the end of bull trend days, it's not nearly as bearish as it could have been. Bulls fail to get the kind of buy signal bar and follow through bar that they typically get if the rally is going to make a new high. And to me, it's the bulls are not doing what they need, the bears are not doing what they need, and the result is sideways for 20 bars. I still think slightly more bullish than bearish, but it's really not all that good. It's a buy above 64, but a big bar and multiple reversals. Not a very good stop entry trade. I'm always suspicious if the market gives a stop entry buy in a tight range and the buy signal bar is fairly big, especially if it's having traders buy in the top half of the tight range. So yes, I think it's always in long. Yes, this is a buy, but big bar, big risk. Buying the top half of the range, low probability. Probably not going all that far, so reward not all that big. That is a bad combination for someone looking for a stop entry buy. So yes, the probability is you make money, but not enough money to offset the losses on the times that you lose. You can win 99% of the time and lose money. If you win one tick on every trade and your stop is 500 ticks away, one loss wipes out all of your gains. So you need more than high probability. The reward that you're getting and the risk that you're taking have to be considered as well. Bears trying to get a second entry, a second sell signal for their lower high major trend reversal, but apex of a tight trading range, not good for stop entries. Everybody wants a buy the close or sell the close trend, and we still have time to get one, but right now it does not look like one is about to begin. Very simple, market's deciding, get back down here, a major lower high, a major higher low, or trigger the buy signal on the weekly chart. The bulls and bears have the same problem. Tight trading range with big signal bar. Bad combination for stop entry traders. That's the target for the bears, 60-minute moving average, bottom of the channel, and the breakout point. Right now I think we will not get there. But if we get a couple bear bars closing on their lows, then it will become likely that we will get there. Bulls need a decent bull bar to overcome 65, 66. Bears trying to get a breakout below 57, but unlikely to go very far down. And chances are the bulls will be disappointed with 67 as well. So right now, it looks down. So if we close near the low of the bar, probably always in short, but we're still in a trading range. We've been in a trading range for since maybe bar 23. Bulls want 2 legs down, 1 pullback 2. Strong enough sell off 57, second leg down likely, and you can see they bought the 57 low. If this bar closes on its high and does not get much bigger, it'll be a high 2 buy 57. The bulls will try one more time to get up to the high of last week. If there's a prominent tail like 58, 59, a lot of the stop order bulls will not buy above 67. Bears still on the sell below 65. Because of all the reversals and the lack of a series of consecutive trend bars up or down, traders are hesitant to sell at the low after 3 bear bars. This is their target. It was important earlier in the day, around the 60-minute moving average. 2,500, big round number, has been an important price for the past 3 days. It's the middle of the tight trading range. Here's the 60-minute chart. 3 bear bars. That will make bulls resistant to buying above 68, unless 68 is a fairly strong bull bar. Sometimes you'll hear me talk about sell the close bear trends at the end of the day. And if the day is a bear trend day, today is not. If the day is a bear trend day, you can get a sell the close bear trend that starts at noon or even earlier and make it to the end of the day. If the day is mostly a trading range day, like today, or a bull trend day, like today, and you get a sell the close bear trend that starts before 12:30, it usually will not make it to the end of the day. So usually you'll get some kind of reversal, at least a few bars up. Here's a sell at close sell off. It began fairly close to the end of the day. Trading range started at 12:15 here, made it to the end of the day. Usually it has to begin later in the day. Started around 12:30 or so. This is a bear trend day, and it could start at any time. Trading range day, tried to start it at 12:05, could not make it to the end of the day. Bull trend day, tried to start it at noon, could not make it to the end of the day. We got a couple of bounces along the way. Tried to start it at 11:20, mostly a trading range day, and the bulls got a reversal. Bear trend, trading range. This I don't have the time here, but it looks like it's starting around noon, 12:05. Too early. Usually you get at least a few bar reversal out of it. So this is sell the close, sell the low bars, but it's probably not going to make it to the end of the day. We're probably going to get some kind of reversal. Bulls look for a bull bar closing on or near its high. Bull bar closing on or near its high. Here, they never got a decent buy signal, and the 2 rallies only lasted 1 bar. Small global bottom, bull bar closing near its high. 4 bear bars. Most bulls will not buy above 69. They'll wait for a micro double bottom, but bears will get out 4, 5, 6 ticks above any bar, including a bear bar, and 1 tick above a bull bar. Any reversal is an acceptable swing buy because you're going for a big reward that can offset the low probability. This is not high enough probability for a scalp. It's a big high 2, 57, but 4 consecutive bear bars. I think it's not high enough probability for a scalp. you're risking $400 per contract, and you have 4 bear bars. Not worth it. So the bears, 69 is a pullback and a bear trend, and therefore a sell signal bar, but has a bull body and we're right above the support. The 32 low, the 12 high, 60-minute moving average. Bulls trying to get a bull body, then they'll have a micro double bottom, 69.71, and a higher probability of a bounce. Probably will stay in this range for the remainder of the day. It's possible we'll dip below the 32 low. Unlikely that we'll get up to last week's high. Unlikely that we'll break below the 60-minute moving average. Probably stay pretty much in here for the rest of the day. We've been sideways for 40 bars. Bulls want 71, closing near its high. Some bulls will buy above 71, others will buy above 69. And for the bears, I would get out above any bull bar. As I said, it's unlikely that a sell to close bear trend is going to last for the rest of the day, unless the day is a bear trend day, and unless it starts around 12:30. Here it's starting at 11:55, and it's either a trending range or a bull trend, so unlikely to keep going down without at least some kind of a bounce. Micro double bottom, as I said, some bulls will buy above 71, others will buy 69, and for the bears, I would get out above 71. Are we going to get a big reversal up here? 4 sideways bars, probably not going to go far up. So this is one of those trades where the math is not great for scalpers. Big risk, small reward, probability not all that great. Better than 50-50, but not 70%. You can see it went up exactly 10 ticks and then reversed. That tells you that a lot of the bulls just scalp for 2 points. It had to go up 10 ticks for them to make 8 points. They get long 1 tick above 71. They place a limit order 8 ticks above that, and it has to go 1 more tick to fill their order. So it has to go 10 ticks above 71 for them to make 8 ticks, 2 points. And that tail tells you that a lot of the bulls scalped. Bears double top 69.72, but you're selling at the bottom of a 4-hour trading range, right above a breakout point, 12 high, and the 60-minute moving average. So it's the opposite problem that the bulls have with 71. Not much reward, and the bars are big, so the risk is big. So you get big risk, not much reward, and to take the trade, you need very high probability, like 70 or 80%. This is not a 70 or 80% short, just like 71, not a 70 or 80% buy. Bulls, the swing bulls are still long, stop below 70, but there probably are more buyers than sellers below 70, bottom of a trading range. For the swing bulls, they're still on the buy, 71. They're trying to get 72 to have a bull body that will encourage the bulls to hold long, and the bear body discourages bulls. So a lot of the bulls will try to get out around break even, but it's still on that swing buy, and it's not a good looking double top bear flag. Double top 69.72. So probably buyers not far below 72, below 70. This breakout point 12 was support, 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 and the bears are trying to break below it, but the 60-minute moving average is also support, and it's just a little bit lower. So the odds are against a big sell-off here. Not a good looking sell signal bar, 72. And that means a lot of bears will not take this short. Small wedge, 3 reversals up, 69.71. Bulls trying to get 74, but stop order bulls want 74 to close on or near its high. And for the bears, you can see bear bar 72, but bulls bought below. Bulls bought below 70, limit order market. Probably not going to go very far up and probably not going to go very far down. 60-minute moving average support just below, plus this major higher low, and tight trading range. Usually the market does not go very far up or down if you get a tight trading range at the end of the day. Usually I use 1245 as kind of my guide. If it's in a tight range at 1245, it's probably not going to go very far. Tight trading range, same problem, right? Reward is small, bars are big, so risk is big relative to reward, and more of a limit order market, so the probability is not particularly good for stop entry traders. For the bulls, they have a small wedge at support, and for the bears, they have a low 1, low 72, you can call it a double top, but also at support. So much better for limit order traders, buying below things and selling above things. Bulls trying to get to last week's high. I don't think they'll get there, but they're trying to set it up for tomorrow. The bears will want to get, they have a lower high major trend reversal here. They'll try to get another one here, head and shoulders top, left shoulder, head, and then right shoulder. Head subdivided into a smaller head and shoulders top, left shoulder, head, right shoulder. Remember I said this would probably not make it to the end of the day because it started too early, and today is not a bear trend day. So bulls trying to get by the close in the final bars of the day. We had several interesting things today. Daily chart, we had a low 1 sell. We have a rally in a bear trend. By going below yesterday's low, we triggered a low 1 sell. Odds were buyers below. 10 consecutive bear bars never happened in the history of the stock market. Odds are if we get a couple legs up, that means the first reversal down, the first low 1, will probably fail. So we knew there'd be buyers either at yesterday's low or within a day or two below yesterday's low, maybe down to the December 24th high. So we knew this was not going to be a big bear trend over the next few days. Weekly chart, we have a buy signal. Daily chart, sell signal. Weekly chart, buy signal. And for the past several days, I've been saying both would trigger. We did not know which one would trigger first. The sell triggered first, and now we'll probably get the buy tomorrow by going above last week's high. And both are minor reversals. The sell is following a very strong rally after a sell climax, probably a minor reversal down. And the buy is following a very strong bear breakout, probably a minor reversal up. I think we're going to test above the February low, and all the bulls who bought in 2018 are now losing positions, and a lot of them are looking for any kind of a bounce that will allow them to sell out of their longs with a smaller loss. So even though I think we'll test up to the breakout points, any of these lows, somewhere in here, 50% pullback, moving average, somewhere up in here, I think there'll be more sellers than buyers, and then we'll test back down to the December low, which is also the low of last year. On the day we gap down, and first 2 bars, tails on top. The third bar, we had a close on the high of the bar, so that made it probably always in long. And because we're reversing up from below yesterday's low, and the gap below yesterday's low is not all that big, and the daily chart is bullish, we probably were going to close the gap and get above yesterday's low. And I said because yesterday, Monday, had a small range, there was an increased chance that today would be an outside up day. In fact, somewhere in here I said it probably would be an outside up day. The range is not all that far, plus we have an important magnet just above. I said that during this rally, we have a whole bunch of bars left to the day, and we'll probably end up spending a lot of time going sideways rather than going straight up. If you get an outside up day, sometimes you get a huge bull trend day, but most of the time it doesn't go all that far above the high, and you end up spending a lot of time going sideways. Stop entry traders, to me the first buy was above 3, always in long, and then we have a micro double bottom 7, So you buy above 7 or 6, closing the other highs. 8, a surprise bar up. Odds are we'll get at least a small second leg up. You can buy the close knowing that the odds are the Bears will need a micro double top, and they got it, bar 12. The Bears were hoping that this was simply a pullback from the break below yesterday's low and the break above the 60-minute moving average, and that we would get a bear trend. But I think 8 was too big of a bull bar. It broke far above yesterday's low and far above the 60-minute moving average, and therefore at this point we're probably going to try to get up to yesterday's high. A pair of decent bear bars, 12, 13. The bulls are hoping 14 is just a breakout test, a test of yesterday's low, a test of the 5 high, a test of the 60-minute moving average. Big enough bear bars, 12, 13. Bulls probably would need a micro double bottom, and instead they got a breakout 15, a surprise bar up. Probably we'll get at least a small second leg up, and we rallied for another 6 or 7 bars. For the bears, a double top 12, 16. Okay to get out of longs below 16. The bulls who get out of longs below 10 or 12 had to buy again above 14 or 15. They could get out below 16. I would not. I would hold just in case it did what it did, a 1 bar pullback and then resumption up. If they did get out, they'd buy again above 19. 20, decent bar. 21, 22, decent bar. 22 had 2 problems with it for buy the close traders. It's still buy the close, but your stop, your risk is big and the probability is less. You're buying right below resistance yesterday's high, plus it's a bigger body, so it could be a buy vacuum, a buy climax test of yesterday's high. Bulls, I would get out below 23. Bears, do they short below 24? They could. I think it's not great. If they did, they probably would get out above 25 or 27. So pretty much unclear through here. I would get out of longs. I would not buy above 25. You have an IOI at the moving average, 33, a breakout test, 12 high. You could buy above 33 or wait for a second entry, buy above 36 or 37. And you can see everybody bought during 38. Surprise bar up 38, probably at least a small second leg up. 40 might be that small second leg up, but probably not. We're probably going to try to get up to last week's high. Outside up 42, buy the close 43, and then we have an II. That's actually not an II, but we have a high one bull flag 46. But we're trying to get small sideways bars again. You can take the buy. There's room to the high of last week, but disappointing entry, disappointing follow through. Bulls, I would get out 4, 5, or 6 ticks below any bar, 49. They have to buy again if they're trading always in. 51, not good enough, so I would not buy above 51. And then the bears got a surprise bar down 53, big tail, 56, a better short, but I think at least a 50% chance second leg trap, and then we're going to try to get up to last week's high again. So yes, you could sell below 56, but I would get out above 58. The bulls, you buy above 58, I would not. If you're trading always in, I probably would buy above 59, get out below 62. Bears sell below 65, and it's more stop entry sell below 66, below 68. I would get out of shorts above 71 and either buy above 71 or buy above 76. Buy the close, sell the close, buy the close. 3, maybe 4, not great. 8, 9, yes, but need to stop below the buy climax, low 7, and then really not good buy the close here. By the time it became good, 20, 21, you're not going to buy 22. You have to expect a trading range, which we got. Surprise bar up 38, maybe buy the close. Is it sell the close 30? If you want to take a chance on the swing down, but it's probably a minor reversal. We probably will get back to that 22 close and above yesterday's high at some point today, which we did here. So buy the close 38, 39, really not good, any of this. Sell the close 56, surprise bar, not much more down. 65, 66, maybe sell the close 66, 67, 68, and then buy the close 77, 78. Not very good buy or sell the close day because of all the reversals. and a lot of limit order trading. The first reasonable limit order trade was buying the 4 low, maybe the 6 low, and what about in here? Maybe buying the 18 low, a small sell signal more, not good. Selling 26 high, big bear bar, 2 bear bars here. Maybe buying the 33 low, probably buying the 41 low, 45 low, probably buying, even though you can argue parabolic wedge 1 or 1, 2, and then 3, strong enough. The bears would probably need a micro double top. I said 46, that probably would be sellers above 44, 45, but really not good limit order selling. 3 big bear bars, 57, probably sellers above, stop above 54. And then here, not, really good limit order trading. I said probably buyers below 70, limit order bulls, what below 70, and that was it into the close. The bulls are trying to trigger the weekly buy signal, and they'll probably do it tomorrow. They'll certainly try again tomorrow. Let me take a look at questions. So weekly buy signal, probably going above the February low, but probably will stall out somewhere in here, 2600 area, and then probably one more new low. And as I said, the reason why, I have a couple of reasons why I think this is not going to be the final low. One is 32 times in the past 100 years, the market has corrected 20%. No time did it stay at 20%. Every one of those times it corrected at least a little bit more. So we're probably going below the December low, the low of last year. You could also argue last year opened over here, closed over here with a bear body. Therefore the market will probably want to see what's below last year's low. I don't have a yearly chart, but the year has a bear body, and it's in a 10-bar buy climax on the yearly chart. So we probably have to go below last year's low, and that's consistent with this. And this is a big enough sell-off that I think we're probably going at least a little bit lower, and maybe a wedge bottom, 1, 2, 3, or 1, 2, and then 3, and that probably will end up being the low for the next many months. Last year we had a sell-off into February, and that was the low of the year. We tested down in April, and then we rallied. I would not be at all surprised if this year was somewhat similar. A low in February, maybe a double bottom here. Here, if we go up for a few weeks and then test down, we'll have a double bottom with last week's low, and then that low that will probably form a few weeks from now. Okay, question. When we get always in long by going below a bear bar, how do we get back in? Oh, when we get out of always in long below a bear bar, how do we get back in? So, for example, let's take a look at this. We're always in long. We get out below a bear bar, and you wait for a reasonable buy signal bar, maybe bar 25. But if the sell-off is reasonably strong, you have big up, big down, big confusion, it's better to wait for a second buy signal bar. And you want a bull bar closing on or near its high. So 33, 36. If you do not take either of those out of fear of one more leg down, then 38. And if it's always in short, the opposite's true. If you get out of always in short, you wait for another bear bar closing near its low. And if you don't get a good one, the next few bars, you just keep waiting. And sometimes you end up using a bar that's bigger than you want. So 38, for example, always in bulls, that's where they buy if they did not buy here or here. I hope that answers the question. Good question. I've been successfully trading stop entries for 2-point scalps. Sometimes they rally without a pullback, like above bar 19. But often I have to stress through a 2 to 5 point pullback like above 21. First, any advice on better entries without missing lots of trades? No, the things you're talking about, if the market's always in long and you're buying a bull bar like 19 and use the appropriate stop, sometimes you're going to get a crazy big pullback. For example, if you buy above 8, technically your stop is down here. You had to sit through a big pullback, yet it came back. If you bought above 22, not ideal because it's right at yesterday's high. Your stop is either here or here, better here, and you had to sit through a big pullback, but you knew it was coming back to that 22 close, probably 80% chance. So a very high probability of profit, and that increases the chance of a big pullback. Whenever you have a very high probability of profit, you have bad risk reward, and that usually means the stop is further away than you want. So I understand everybody wants to buy above 19 and put a stop below 19 and have it go up 5 points, 10 points. But, you cannot have a high probability of making a huge reward with very little risk. You cannot have all three variables. At least one has to be bad. So, as a trader, you just know that. And if you're taking a trade that you say, wow, this looks good, the risk is big or the reward is small or both. And you just have to look at the trade and say, yeah, I think it's a reasonable trade. I see where my stop has to be. If the stop requires you to risk more than what you should be risking, you don't take the trade, you just let it go. So if you have a $10,000 account and the stop has to be 15 points away, $700, that's a 7% risk. You just cannot take that trade. You just have to wait. What are the arguments against trading a 15-minute chart exclusively? Thoughts about using the 5-minute chart to confirm what you're seeing on the close of the 15-minute. I think any time frame is fine. I trade a lot on the daily chart, on the 1-hour chart, on the 4-hour charts. When I'm trading options, I do that all the time. And a lot of times, if I see a setup on the daily chart, I'll wait for the 5-minute chart to pull back, and I'll try to enter on a pullback on the 5-minute chart. It's a very popular way to trade. You look for your trade on one time frame, and then you look for your entry on a smaller time frame. Very, very common. And there's nothing wrong with trading the 15-minute chart and taking entries on the 5-minute chart. Trump today said that there was a glitch in the stock market in December. Does he mean we're going way up? Trump early on said that because the stock market went up, he's smart. And therefore, if the stock market goes down, he cannot say that it goes down because the implication is then he's stupid. So anytime the stock market goes down, he's going to trivialize the sell-off. And, the term glitch is an example. Do I think we're going way up? Well, take a look at my blog over the weekend. I think we're going to be sideways for many months, probably a year. And even if we do go to a new high, I do not think we're going to go far above the old high. I think we're going to be sideways for, many months, maybe a year or more. Also, Trump, let's face it, even if you're a Republican, he just doesn't tell the truth. He's a salesman. He's going to say what makes him look good. So if he says it's a glitch, that, the question says, does that mean the stock market's going to go way up? That, you're implying that he knows something about stocks. When you think about the great Wall Street investors, have you ever once heard his name mentioned? No, he's not a stock market trader. He's a real estate trader. And, he's not an eye surgeon, right? He's not a professional baseball player. His expertise is real estate and then marketing, TV, sales, TV shows. So to have him tell you that the stock market is strong and it's going to go way up is meaningless. He doesn't know. He doesn't. That's not where he makes his money. That's not his strength. So, and also when I look at the charts, if you read my post over the weekend, you'll see. I think we're going to be sideways for a lot of months. What's the red line that you're showing on the weekly chart? Let me turn it to a monthly chart, and it's a trend line from 2011, 2016. So very important price. We have officially a bear trend. We fell 20%. Every bear trend ends at a monthly bull trend line, or at least some kind of monthly support. We're at a very important monthly bull trend line. Does that mean the bear trend has ended? No. There are other monthly trend lines. I don't have them drawn in. But just because every bear trend ends at a monthly bull trend line, and we're at a monthly bull trend line, that does not mean that this is the end of the trend. A lot of times you need a micro double bottom like this, and here sometimes you get a lower low double bottom. This was at a trend line that went back to 1987. The trend line went right through here, and it's another example. Here we fell off 59%. Yet it ended not exactly. We fell a little bit below the monthly bull trend line and then continued up. So this is the monthly chart. That's that red line. If I convert it to the weekly chart, it's that same red line. So that weekly buy signal should trigger probably tomorrow. If not tomorrow, then sometime this week. However, we're in a bear rally, and it may last several weeks, but it's a bear rally. Might get up to the sell. This is the daily chart. Might get up to the sell climax high, spike, pullback, parabolic channel. So might get up to 2,700, but it's still a bear rally. And if we get all the way up there, then this might end up being the final low. If we stall around here, then we'll probably get to a new low. Okay, hope everybody has a good night.